Welcome to On the Mark, Financial Literacy with Mark Zinman. We're excited to offer you the next installment in this multi-part series on end-of-year tax planning considerations, including end-of-year employee bonus regulations. So Mike, when we talk about rent and utilities falling under the category of general operating expenses, and then you talked about office supplies like pens, paper, cleaning supplies. I believe you may have touched on insurance premiums and software and subscriptions. Would it be correct to say if you have a particular license to use some software in your business, you have been using it regularly, you're very happy with it for the last 3 years, but you've been paying month to month for flexibility, that during tax planning season, it might be a decent time to look at, will you receive a cost savings if you go to an annual subscription model and then pay that entire annual fee or cost in December as opposed to continue the month to month?
Well, the one thing you're mentioning, yes, I agree, but that's something you should be doing anyway. I mean, if you're going to have, if you know, I had a subscription today and it said $40 a month or $32.33 if you pay a year in advance. Well, if it's something I was going to use, I would always pay the $32.33 and just pay 12 months in advance, right?
And how often do you recommend to your clients that they take a look at that? We might be sidebarring a little bit here, but is tax planning season a good time to look at your costs and your expenses and make adjustments at the same time as you are? Is now a good time to do it, or do you recommend a greater frequency or a different time of year?
I recommend doing it anytime. Okay.
Anytime.
But certain times when you're paying attention, like a lot of our business clients, we do quarterly. So we're paying attention March, June, September. Tax planning is usually done in November and then December. And if you're a small business owner and you're just now starting to look at the kind of stuff you can prepay, then you should certainly be looking at those bills in sense of like, am I getting my greatest value? I mean, like if you have T-Mobile, Verizon now offer to beat the bill. There's something going on. If you have Xfinity, they're announcing if you have Fios, you can go to Xfinity and it's $89 a month for the rest of your life. So if there's something out there that might be, it's always a good opportunity if it's going to save you some money and the amount of money may be material to always do that, because I have a saying, you can't cut expenses to be profitable, but you can increase profit by cutting expenses. So, we should always be looking for the best deal. We should always be looking to see if we're utilizing at that cost and if we're getting a cost of, a value. And you should always be shopping. But yes, if this is the time of year that you're looking at what you might pay, then it's obviously you're staring at the bill, you're pulling the bill out, you're seeing how much you pay for your health insurance, you're deciding if you're going to prepay it for a few months. Maybe something to key you off to ask whether you're getting the best price or not.
And what about some other expenses? And we can talk about expenses that may be reimbursable to employees, for example. So if you are reimbursing for mileage, if you are reimbursing for any other type of travel expenses, if you are reimbursing for meals, would end of year be a good time to get caught up on those receipts if you normally have a longer?
Yeah, but it's the same thing I said before. Like if you have bills that you would normally pay in January and you want to accelerate it, yes, that's certainly one thing. You don't prepay payroll. Not only because of the fact that maybe the employee won't show up next week, but also because then you're going to negatively affect that employee's taxes, right? So we don't recommend that. But if you have employees that normally turn in expense reports, maybe you have them turn in even estimated expense reports and then reconcile them in January. But again, keep in mind that you're trying to attack categories that have enough materiality to be worthwhile. I mean, if your normal reimbursement to an employee is $100 or $150, unless you have a lot of employees, that may not be worthwhile expense to try and get everybody to get their expense reports in. But if it's something more material or in aggregate it is, then yeah, certainly.
So there might be, in addition to standard payroll, there might, however, be a year-end bonus that is issued to employees.
Yeah, and I have seen employers who maybe pay bonuses in January and move them up to December. You can do that. A lot of people pay holiday bonuses, but those are usually paid in the year. A lot of people pay them between Thanksgiving and people don't necessarily give Christmas bonuses; they give more holiday bonuses now, so it's usually paid in that month period between there. They're usually not paid in January anyway, so there's nothing to accelerate. But if you were going to pay a year-end bonus based on profitability or something and you wanted to accelerate that, yes, that would be fine too. We just don't want you prepaying an employee for January work in December. But if you're going to give them a bonus and you decide that you're going to give them the bonus in December and then January, that's your choice.
So I consider it to be potentially kind to issue a year-end bonus if you do offer a discretionary year-end bonus to your workforce, monetary discretionary year-end bonus to your workforce, to issue it in the month of November. During the Thanksgiving season, it is traditionally a time for people in the United States to reflect and give thanks to those people that have helped them in their personal and professional lives. So it's a good time to give thanks and to recognize your workforce. In addition to that, a lot of employees will potentially count on a discretionary bonus, which is dangerous because counting on and discretionary are not, they're not compatible with each other, but nonetheless will hope to use a year-end bonus to help fund their holiday gifts to their family and friends and loved ones, if that's part of something that a part of their year-end celebration, if they have one.
Hanukkah, Christmas, or whatever their holiday is.
If they celebrate, exactly.
Before the holiday, not after the holiday. So it would be sometime after, around Thanksgiving or after.
Right. So if you issue an end-of-year bonus prior to a really busy shopping season, you are arming your employee with budget information as to how much they can count to spend from that bonus, especially if it's a discretionary and varies from year to year. And it's just a kinder way to help an individual budget for their holiday expenses. And since this podcast is all about budgeting, I thought I might have just snuck that in there a little bit.
When I gave you a hard time at the beginning of this conversation, that's not what I thought you were going to ask. I thought we were going to have a discussion about how you give bonuses to employees.
Let's talk about that.
And I feel like I'm going to get on my soapbox here. So,
right, please do.
Gifts have a $35 limit. They've had that limit for a long time. It is really a ridiculous limit, but let's just assume for right now that the possibility, you cannot give your employees tax-free money in any form, shape. You can't give them gift cards. You can't give them checks out. You can't start, it's less than $600, so it's not a 1099. There is no de minimis amount for an employee. There is for a vendor, but not for an employee. So all those things don't count. So we very much encourage our clients that if they want to give somebody a fixed amount like $200 or $500 or whatever, that they back into a gross salary to do it.
This might be new information to them. So the expression that might be used inside of the payroll department is to gross it up. So if that's what you hear, right? So I might say, Mark, I would like to give a $500 bonus to John Doe, but we would want to gross it up. So that's the expression that's really what you're talking about.
Yes. So what's gross up? So when somebody goes home with a $500 check, it usually might have been a $600 or $650 gross, right? Because what you get home is after all your taxes. So
you want them to net the $500.
If that's what the employer wants, yes.
If that's what the employer wants.
If you do what my way was says, I'm going to give them 1 week pay and 1 week is $650, then you're going to give them $650 and it's going to be whatever the odd number is at the end, $507.30, whatever it is. But if you want to give them a round number, you're going to have to back into it. And most payroll providers are equipped for you to call them and say, I want to give John Doe $500. What's my gross? And that's probably a common question they get this at that time of year anyway.
Right. So with our human resources hat still being on, employees will sometimes complain about this because they might not always recognize exactly what happened. So if your employer tells you that you are getting a $500 bonus, but you are netting much less than that, the employer paid the $500, but the taxes were taken out as they need to be. So if you ever question the amount of bonus that you received, you will probably find the delta in the taxation, right? That there was.
Right, but I was also addressing the fact that somebody wanted them to net $500.
Of course. Of course. So know that
$500, they would walk home with maybe $398 or something, of course, whatever the taxes are going to come out of it.
Right. So if you're so you want to be clear as a supervisor when you are talking to your employees so that your employees are not disappointed whether they're going to be netting $500 or whether they are going to be netting less than that, because a $500 bonus needs to be called what it is, and it can result in two different numbers.
Yeah, and you don't want confusion. And I speaking as an employer, I'm giving that bonus because I want to be benevolent and generous. And so if somebody feels that somehow they weren't valued because of the outcome or the perception, then that would be completely opposite of what I'm trying to do. So you need to disclose. Yeah.
Thanks, Mark. We're going to pause here and look forward to picking up where we left off next week. See you then. All content provided on this podcast is for informational purposes only. No representations are made as to the accuracy or completeness of information that is presented. On the Mark, its owners, collaborators, and guests will not be liable for any errors or omissions, nor for any losses, injuries, or damages from the use of this information.